Assalamu alaikum students, Bismillah ar-Rahman ar-Rahim. This is Junaid Khalid in front of you. Okay, in this video we are going to discuss the very important topic with respect to the financial accounting paper, that is F3. Not this topic is relevant for the F3 paper, but it's quite relevant for FA1 and FA2 as well. The topic is reconciliation of control account. In this particular video I'm going to give you the very brief introduction of the control account reconciliation, that why the control account reconciliation is being done and how the reconciliation will be done. So that would be the central idea or the agenda of this particular video. Okay, before we move on, it's quite important to know the reason or to know the mechanism of the control account, that how the control accounts are being prepared and how the individual accounts are being prepared. Let's quickly look at the mechanism or the system of control account. Okay, moving on, in front of you there is an example. Let me explain you. Whenever we record the transaction in any book of prime entry, we all know that there will be a source document on the backhand. For instance, if we are recording the sale transaction, there will always be a sales invoice, and that sales invoice is known as the source document. That sales invoice is known as the source document. Okay, before we record any transaction, we always have a source document. So for example, there's a sales invoice and we sold goods to Mr. A for $5,000. Okay, now what will be the next step? That sales invoice will be recorded in the book of a prime entry, in one of the book of the prime entry, and we all know that there are different books of prime entries like sales day book, purchase day book, purchase day book, purchase return day book, sales return day book. So there are different books of prime entries. So once the invoice has been generated, now that invoice is the sales invoice. So this transaction will specifically be recorded in a book of prime entry, and that book of prime entry is known as what? The sales day book. So what we did, we recorded that sales invoice in a customer account in a sales day book with the amount of $5,000. Again, another invoice that we have received or we have issued, that is a sales invoice which we have issued, and we sold goods to Mr. B for $4,000. We recorded again that transaction in a book of prime entry known as sales day book. Again, Mr. B 4,000 recorded in the sales day book. Again, we sold goods to Mr. C, raised an invoice, that is a sales invoice, and the amount is 3,000. We recorded that amount in a book of prime entry, and now the sales day book is completed, and the benefit of that sales day book, that same nature of transaction, same nature of activities are being recorded at one place. Am I right? Yes, that is the benefit of the sales day book. That is the ultimate advantage of the sales day book, that the same nature of transactions are being recorded at one place, which means now I am not required to prepare entries for individual transactions. Let's say if I'll be recording all of these transactions in a journal, so I'll be recording 3 entries for the sales transaction: account receivable debit sales credit, account receivable debit sales credit, and account receivable debit sales credit. But now this not to be done. What we'll be doing, we have accumulated the same nature of transactions at one place, and we have a total of $12,000. Now that $12,000 will be recorded with an accounting entry of account receivable debit and sales credit with one single entry. That is the account receivable debit and sales will be credited with the amount of $12,000. Okay, so that is the sales day book which we have completed. Now what's next? Now that accounting entry will be posted into the ledger account, that is the account receivable, and the sales account receivable will be debited by 12,000 and the sales ledger or account will be credited by $12,000. So this will be the ledger posting. This obviously the second step. After preparing the accounting entry, we posted that amount or accounts into the ledgers, into the general ledgers or the T account. Okay, if I would ask you a question that can you tell me the closing balance of the account receivable? And yes, Yes, obviously, every one of you could tell me the balance on the receivable account is $12,000. What does it mean? It means we have to receive that amount from the customers. We have to receive that amount from the customers. From all the customers, we'll be receiving $12,000. That is the amount to be received from the customers because of the goods sold on credit. That is the total amount we'll be receiving from the customers. Okay. What amount will be charged to P&L or will be credited to P&L? That is the 12,000 will be transferred to the P&L account. Is it? So that is the end of the control account or the T account. Okay. But what if I ask you a question that, can you please tell me that what amount we have to receive, from Mr. A? Can you please just ignore the upward calculation, just ignore the sales J book. If I just give you the account receivable ledger or the account receivable T account and there's a closing balance of $12,000, that indicates or shows that we have to receive that amount from the customers. And if I ask you a question, can you let me know, can you tell me that what amount we have to receive from Mr. A? If I ask you a question that what amount that we need to recover from Mr. B? If I ask you a question that what amount that we need to recover from Mr. C? And I tell you, I bet you, you will not be able to tell the answers of these particular questions, because that account receivable closing balance, that account receivable ledger balance shows the total balances. That shows the total balances. And what does it mean? It means that is the total balance we need to receive from the overall customers, which means you cannot identify the balance or the receivable balance from Mr. A. We cannot identify the receivable balance of individual customers from that particular account receivable ledger or the T account. So there is a bottleneck. There is a bottleneck in the company's system that you cannot determine the individual balances of customers or even suppliers. Am I right? We can take this example as it is for the purchase book as well. For instance, if there is a purchase invoice, definitely the transactions would have been recorded in the purchase book and the total would have made a single entry, purchases, debit and accounts payable credit, and the accounts payable ledger will show the total outstanding balance need to be paid to the suppliers. Again, we will be unable to know or to calculate the individual balances of the suppliers, that how much amount we owe to the individual suppliers. So it means there is a limitation of that ledger or the T account. There is a limitation of that ledger or the T account that we cannot identify the individual balances of the customers or the suppliers. I repeat my words, we cannot identify the individual balances of the customers and the suppliers, because these ledgers shows the total balances that we own or we owe, as the case may be. Now, what's the solution? What's the solution? Now, what normally the company do, what normally the process is, that whenever we receive an invoice or whenever we issue an invoice, we record the transaction in a book of relevant book of prime entry. On the parallel side, we also recognize that particular transaction on the individual account of Mr. A. Mark my words, what I said, individual account of Mr. A. We have opened an account of Mr. A. Who is that Mr. A? Mr. A is the customer. Right now, Mr. A is the customer. Mr. A is the customer. We recorded that transaction into the account of Mr. A, that we have to receive that $5,000 from Mr. A. Whenever we receive an invoice or we issue an invoice, we record that transaction in the relevant books of prime entry, as well as we also record that activity into the account of individual customer or supplier, as the case may be. Again, we issued an invoice and we'll be recording that transaction in the relevant books of prime entry. On the parallel, we will be also recording that transaction in the accounts of Mr. C. Okay, so what we did so far, that we recorded that invoice amount in the relevant books of prime entry, as well as on the contrary, we also recorded that account or amount in the individual accounts of Mr. A, B and C, that is the customers. Okay. Now, if we just look at the balances, what is that account? That account is the account receivable. That account shows the account receivable. That account also shows the account receivable. and that account also shows the account receivable. Okay, if we could just calculate the account receivable from Mr. A, that what amount we have to receive from Mr. A, that is obviously the 5,000. And what amount should we have to receive from Mr. B? That is obviously again the 5,000. And what amount we have to receive from Mr. C? That is obviously again the 3,000. Sorry, I just made an error. From Mr. B, we have to receive an amount of $4,000. And obviously speaking, we have to receive an amount from Mr. C that is of $3,000. So that is the individual accounts of customers. Now, is it feasible and possible to calculate or to know the balances of individual customers? Yes, now it's practically possible. Now, if any of the customers calls me and asks me a balance, that what amount did I owe to you or what amount I have to receive from that particular customer, I can definitely look at the ledgers of individual customers and can let him know that what amount you owe to me or I own from you. So that is the individual accounts. Okay. These are the account receivables ledgers, and this is also the account receivable ledger. So what's the difference in it? That account receivable ledger shows the total balances, and to that account receivable ledger we say, or we can call it as a control account. This ledger is known as what? The control account. In some books it is also known as nominal ledger. And in some places it is also known as sales ledger control account. Sometimes the examiner uses the words of control account, sometimes it uses the words of nominal ledger, and sometimes the wording sales ledger control account is being used by the examiner. So it means that control account, whenever the word control account, nominal ledger or sales ledger control account is being mentioned in the question, always remember it will tell you the total or the overall balances of the customers. That is the total balances you have to receive from the customer is known as what? The control account. So it indicates the total outstanding balances that is due from the customers. Okay, let's move on. Let's move on towards the next side, that is the individual accounts. If we talk about the individual accounts, now these account receivable ledgers shows the individual balances. These account receivable shows the individual balances. So the name of those individual balances or the individual account is known as what? Individual account. First of all, the most common name. Another name is the memorandum account. Another name is personal account. Another name is subsidiary ledger. It is also known as list of balances. So these are the individual account. Let me tell you, that is the individual account of Mr. A. No, it's a memorandum account of Mr. A. It's a personal account of Mr. A. It's a subsidiary ledger of Mr. A. It's a list of balance of Mr. A. So what is this? So this is the individual account of Mr. B, memorandum account of Mr. B, personal account of Mr. B, subsidiary ledger of Mr. B, and the list of balances of Mr. B. So what is this? This is the individual account of Mr. C, personal account of Mr. C, memorandum account of Mr. C, subsidiary ledger of Mr. C, and the list of balances of Mr. C. So these are the individual balances of customers, and that account receivable or the control account is the aggregate or the total balances of the customers. That is the total amount we have to receive from the customers. Now, what I'm going to show you that the balance on the control account is $12,000. The balance on the control account is $12,000. What if we just add the individual balances of customers like 5,000, 4,000 and 3,000? So the total of 5, 4 and 3, this will make the total, that is $12,000, which means the sum of all, am I right? The sum of all personal account the sum of all personal account, or we can say that the sum of all list of balances, sum of all individual accounts, sum of all memorandum account is $12,000. And if you just have a look on the ledger, on the control account, so the balance on the control account is $12,000. Okay, now balance on the control account is $12,000. Sum of all personal account is $12,000. Hence proved that the balance on the control account should always be equal to the sum of all list of balances. That is the central idea, that the balance on the control account should always be equal to the sum of all list of balances. Is it? Now that should be the ideal situation or the position. But now what normally happens within the organization? That sometimes there are errors being occurred in the system, and there might be some errors that could encounter the account receivable control account, or there might be some adjustments or the transactions that is omitted from the personal account or the individual account, because of which the balance on the control account and the sum of total balances doesn't equals. It means ideally the balance on the control account and the sum of list of balances should always be equal. But at times it happens that these balances are not equal. These balances are not equal or not same, because of which we need to reconcile the balances on the control account and the sum of all list of balances, for which what we will be doing, that we will having a reconciliation. We'll be having a reconciliation of what? The control account. So that is the name or the title of the topic, that is the reconciliation of the control account. Control account reconciliation is the process in which we reconcile the balances on the control account and the sum of all list of balances. At times it happens within the organization that some of the transactions are not being recorded in the control account, and at times it also happens that some of the transactions are not being recorded in the individual account. So definitely there will be a discrepancy, definitely there will be a dispute. It means the balance on the control account is not equal to the sum of all list of balances. So we need to tally both the balances. For that reconciliation, for that matching, or for that purpose, what we do, we perform an activity, and that activity is known as what? The reconciliation of control account. So that was the overall introduction. One more thing that I need to identify in that particular video is always remember that control account or the nominal ledger or the sales ledger control account, that shows the total balances. Okay, that follows the double entry bookkeeping. Now what does it means? Every debit will have an equal credit. If you have just observed what I did, account receivable debit and sales account were credited, is it? So it follows the double entry bookkeeping. So always remember, control account follows the double entry bookkeeping, and it is the part of your accounting process. It's a part of your accounting process. However, if we just talk about the memorandum account or the personal account or the individual account, what I did, I recorded the transaction in the receivable account by debiting $5,000. But I didn't credit it any other ledger account. We are just maintaining the accounts of an individual customer for our customer or for our support system, for our good management system, for our credit control department, so that we could identify that from which customer what amount to be received. So it means we are just debiting, or we are just recording the customer account. We are not recording the other side of the accounting transaction or the entry, which means we are not following the double entry bookkeeping. And if we are not following the double entry bookkeeping, which means in a personal account or the individual account or the memorandum account or the list of balances, we are not following the double entry bookkeeping. So first thing you need to keep in mind for MCQs exams, that double entry bookkeeping is not followed. Double entry bookkeeping bookkeeping is not followed. Double entry bookkeeping is not followed. However, there is an exception. Inshallah, in any other video, I'll be discussing that exception. But right now, the primary or the basic rule is double entry bookkeeping is not followed. And if no double entry bookkeeping is being followed, which means it's not the part of your accounting process. Is not the part of your accounting process. So remember, always remember, memorandum account or the subsidiary ledger, it's not the part of your accounting process. However, the control account, it's a part of your accounting process, because of which it follows the double entry bookkeeping. So that was the overall introduction of the control account reconciliation, that why the control account reconciliation is being performed and what is the control account reconciliation. I hope you like this video. Thank you so much. Inshallah, we'll meet you with another video. Thank you so much.